Surprising inflation data this week has complicated the path ahead for the Federal Reserve. It's now becoming a question of if, perhaps not when, interest rate cuts will come in 2024. And we're looking at how to navigate the big picture with the Yahoo Finance Playbook. Joining us now, Kara Murphy, Kestra Investment Management CIO, and Ivana Delevska, Spear Invest founder and CIO. Ladies, thanks so much for being here. Appreciate it.
Thanks for having us.
Kara, let's start with you. And yes, we've had the hotter CPI print, a little bit more reassuring perhaps on the PPI front. But, if you're looking at the possibility that at the very least cuts are going to get pushed back, we might not get as many, we might not get any. How do you think about then positioning if that is the case?
So if you think about where the market's been so far this year, we have the S&P 500 up about 10% so far this year. And in the meantime, Fed expectations for cuts have gone from 7 cuts at the end of last year to 1 or 2 today. Normally, you would think that would take a lot of wind out of the sails of equities. But as that's happened, economic growth has been stronger, corporate earnings have been stronger. So what we're finding is that there's some really good fundamental underpinning for the strength in equities. So yes, it might be a bit of a disappointment that we don't get the Fed rate cuts, but the fact is the economy just doesn't need it. And so stocks are doing just fine on their own and don't need that little bit of extra help from the Fed.
And Ivana, bring you in here as well. It's interesting, Ivana, because there was a point where I remember Apollo's Torsten Slok says no cuts this year. And there was a point where Torsten kind of almost seemed like he was on an island. But we've had this drumbeat now, more economists and strategists kind of joined that camp. Ed Yardeni this week said now no cuts. That's his base case. Can the market move higher even if we get no cuts this year?
I think it can. I think the focus is going to shift to earnings as we get into the second half of the year. And we see earnings that really bottomed last year. And we're going to see a pretty significant inflection as we get into the second half, especially with comps getting significantly easier in 4Q because 4Q of 2023 was a very difficult quarter.
Can you quantify that, Ivana? What kind of corporate profit growth are you looking for?
Well, it really depends by sector. We covered the technology sector specifically. So within some of the more cyclical areas, like semiconductors, you're going to see explosive growth, right? Because earnings have really been under pressure. Anywhere you look outside of AI. Then on the software side, you're not going to see as big earnings surprises, but those companies have really struggled to keep up their high growth numbers, and I think that's going to really change as we get into second half. So it really depends on the different, even within sectors, the different subsectors. I think broadly for the economy, I think we're much more positive on commodities. I think those have bottomed, and we're seeing those prices inflect in the second half. So all of those companies are going to see pretty strong earnings. So I think it depends on the sector, but broadly speaking, we see it across the board.
And of course, we're about to start getting earnings for this current earnings reporting season tomorrow morning. We get a bunch of big banks. And so, Kara, as you look at these sectors and look at earnings growth that we should expect, I know that Ivana is tech focused. You look pretty broadly here. So where are you looking for that growth to come from?
So I think we agree in that there are a lot of tailwinds heading into the second half of the year. And we've only just started to see corporate earnings inflect. I mean, if you remember, corporate earnings bottomed in the third quarter of last year. So we're only a couple of quarters into this resurgence. Now, we do think that having a quality bias, given some of the continued headwinds with higher interest rates, having that quality bias really helps. And we also expect it to continue to kind of broaden out a little bit. This has sort of been a theme we've been talking about. It's been happening very slowly, right? Last year was so dominated by the Magnificent Seven, but we're starting to see some mid-cap, some smaller cap names start to participate in this, and I think we'll see that continuing as we continue to see growth in the broad economy.
In terms of, Ivana, you mentioned you sounded pretty bullish on semis. A lot of investors are. Any specific names you would think this is a good time to commit capital?
So we still really like NVIDIA. That's our top holder.
Which is at a bit of a correction here.
Yeah, I think it's a pretty decent entry point for the stock. We like AMD as well as Marvell. They all play in different areas.
Marvell is one that does not get enough attention, by the way, which is also had not NVIDIA-like, but a strong run as well.
Yeah, so we do a lot of work on the value chain, and we're finding a lot of value in other aspects in addition to processing, like networking, like liquid cooling, like power management. So all of those areas are a little less talked about than the processing side and offer pretty attractive investment opportunities.
And sort of linked to that, something that we've talked about, but not necessarily as an investable theme, but we've talked about the challenge, the power challenge that comes with AI and supplying the needed power to the grid to do all of that compute. So how do investors sort of take advantage of that?
So on the power side, there are a lot of different ways to play this theme. We do see data center demand growing at a pretty significant rate. We believe that data center will grow from 2.5% of the market, of the power generation market today, to over 7 to 8% by 2027. So this is going to be a pretty significant driver for power gen specifically. So we like to play it on the utility side. That's where we see the most upside. Demand has been very flat for these companies. So a lot of them went even through bankruptcy. So we see a lot of opportunities there in terms of looking for more value and quality plays, to Carol's point. So that's one area. Another area would be on the component side. So there are companies like more industrial companies that provide power generation, either equipment or electronic components, like Eaton would be an example of those companies. So there's a pretty broad set of companies that play in this power gen space. And we do see actual investment opportunities based on that theme.
And Carol, do you share that optimism about tech, or at least certain verticals and sectors?
There's certainly some areas. There are other areas of tech that are feeling a little rich right now. If you look at sort of valuations by sector, for instance, technology is the only area where you have valuations that are running well above historical averages. Now, a good portion of it is very warranted, right? Operating margins have improved, earnings are really coming back and having a lot of momentum, but I think it is an area where you have to be really careful where you're really leaning into.
And speaking of being careful, you mentioned going down to sort of mid-cap, small caps. Small caps have really underperformed this year. So if you're looking within small caps, how do you make sure that you're not getting that interest rate exposure that has really smacked them?
Well, I think that's where, as you're deciding to go down cap, mid cap is a little bit easier to kind of hide in, because small caps definitely do have that headwind with the higher interest rates. There are opportunities there, but I also think that's where you have to be really careful about quality. So if you're finding small caps, overall valuations that are extraordinarily low, so expectations are really low, but if you can also find names that have strong balance sheets, reliable earnings, that's where you can be a little bit more protected from that high rates going forward.
All right, Kara, Ivana, thank you guys both for joining us. Appreciate it.